In this video, we're going to answer the basic question, how does insurance work? Now we're going to answer this from a 30,000 foot view, but we'll also dive into a couple of specific risks that you're probably familiar with. But we're going to do this because you'd be amazed at how many even industry professionals I meet that don't understand this basic question. What is going on? My name is Mike and welcome to another video. If this is your first time here and you want the best financial education from someone who actually does this stuff for a living, start now by subscribing and clicking on the bell to make sure you don't miss out on anything. All insurance works on the basis of one very simple principle, and that is what we refer to as the law of large numbers. So let's take life insurance as an example. I have no idea if you're a 30-year-old, if you're going to die in the next year. But if I get enough 30-year-olds, let's say 1 million, then I have a pretty good idea of how many 30-year-olds out of that million are going to pass away in the next year based on years of data. And that's how insurance works. You pool as many people with the same characteristics into a single class, and then you write a policy. And then you price that policy so that the risks are covered that you expect, plus some margin for error, plus a little room for profit. And then anybody who would be affected by that risk occurring is financially protected. And of course, the insurance company makes a little bit of money. Now, there are several different kinds of risks that you are probably familiar with. Risk to your car, risk to your home. If you're in a business risks. And then of course, something like life insurance or annuities, what we'll call retirement risk, the risk of living too long. These all work differently from one another, but they all rely on that law of large numbers. So for instance, auto insurance. Auto insurance is going to take a look at a number of different factors, one of which is you as a driver. The others are things like how safe is the vehicle you drive, how many incidents of theft of that vehicle are you in a zip code that tends to have a lot of accidents, or are you in a rural zip code where there's very few autos driving on the road? These are all things that will go into the pricing of your policy. In addition, if there is a need to fix the vehicle, as we're seeing right now, the cost of repairs and the time it takes to get the parts all factor into the cost of an auto insurance policy and how those risks are priced. Home insurance is even more challenging because where autos come off an assembly line and there's very little variability between those vehicles, homes are usually quite unique. You may get a builder that has a couple of floor plans in a neighborhood that they've built, but outside of that neighborhood, no two homes are alike. So getting the replacement cost just right is an additional factor that isn't really there for auto policies. Also, the homes tend not to move. So there's something that's maybe a little bit less complex compared to autos. Now, business insurance, if homes are way more unique than autos, businesses are way more unique than homes. No two businesses are alike, even if they're in the same market. So writing business risks is actually quite challenging to pool enough businesses to insure them properly. But of course, carriers have done really good work to make these risks as insurable as possible. It's just when you are working with someone to insure them, you want to make sure they understand the differences between these kinds of risks so that you're properly insured. Now, life insurance and annuities are a bit of a different animal in that the risks that we're talking about with home, auto, and business, those are risks associated with property or liability due to the ownership of that property. With life insurance and annuities, you're actually taking a look at how long somebody's going to live and the loss of income associated with that premature decease, or the impact of outliving your resources. And so if an insurance company has enough policies on the books, then they can pool the risk of too many people dying soon or too many people outliving their livelihoods. So that's how all insurance works in a nutshell. Now you've probably got some more questions than I was able to answer in this video, and that's fine. I've got more videos for you that will dive a little bit deeper, so stay tuned.